Hello and welcome to Switzer Investing Insights, brought to you by NabTrade. I'm Paul Rickard. Welcome to our special budget edition. Well, the government's predicting an earlier return to surplus by 2019-20. On the screen in front of you, you can see the government's projections over the next 4 years. What they started with in last year's budget, the update to the mid-year economic and financial outlook review, and last night's budget in 2018. They're looking for a deficit in 2017-18, that's the year just heading in, of $18.2 billion. In the first year of this budget, a deficit of $14.5 billion, rising to a surplus all the way through 2021-22 of $16.6 billion. A big fiscal turnaround. Let's look at how they're achieving that, in part through the economic forecasts. Growth expected to remain pretty firm at 3%. Strong employment growth and also unemployment heading down towards 5%. Bit of pick-up inflation, 2.5%, but the real one there is the wage price index, going up from 2.75% in 2018-19 all the way up to 3.5% in 2021-22. So certainly back towards trend growth for wages. We'll see whether that happens. Okay, so what are the highlights of the budget? This has been widely televised. Tax cuts that will cost an extra $140 billion over the next 10 years. That'll provide tax relief of up to $530 for low and middle income earners, and big infrastructure spending on projects such as the Melbourne Airport link, funding about $24.5 million in new projects overall. Let's pour into some details. Particularly I'll start with what it means for business. Okay, a couple of changes for business. The most important one for small business is the instant asset write-off. That's where small businesses with turnover of less than $10 million can write off an asset of up to $20,000. That's been extended. For larger businesses, the cuts to the R&D tax incentive plan, which lots of large businesses have been getting, they're going to target that pretty much more narrowly. So there's a big cut to R&D tax incentive. The government's keeping its enterprise company tax plan. A lot of investments in defence, medical and infrastructure will support particular industries. Let's move on to investors and super. Well, some small initiatives on the super front. The good news is no really big change, unlike last year's budget, but some small initiatives. What are they? First of all, the ATO is going to proactively refund lost super. In the short term, that's actually cash back for the government, but over the long term, they're going to take on the job of data matching people with small accounts and actually making sure your super goes back to you. There will be a ban on exit fees and super accounts. In terms of life insurance and default insurance, there'll be people with small super balances, and those of under 25 years in age will now have to opt into life insurance within super rather than having it done for them. A small change for the 65 to 74-year-olds who currently have to meet a work test to make further superannuation contributions. If the balance is under $300,000, they'll be exempt from that work test from the 1 July 19. And the pensioner loan scheme has been open to all retirees. What does it mean for the share market? Well, it's positive for the market. There really weren't any surprises. So it's actually a quite market-friendly budget, providing the assumptions bear fruit. Obviously, a lot of investment in infrastructure. That's got to be good for the building stocks, but some of these projects just take so long. I'm not sure you're going to see it in the market price, but companies there that you could look at include companies like Boral and Adelaide Brighton. Government's announced a package of investment in satellite and GPS technology, so that will probably suit a couple of some of the smaller companies. There's also quite a lot of investments in parts of the medical area. And the tax cuts, they're probably a little bigger than expected. They start from the 1st of July 18. They're targeted at lower and middle income earners. You've got to think they're going to be helpful for retailers. But as I said, this budget's largely going to rest on the credibility of the economic assumptions. That's what I think, but someone who's been studying this a little more closely is Peter Switzer. Peter, what's your assessment of this budget?
Okay, the way I look at the budget is to think, well, can we trust the key forecast that this all rests upon? Everything else is kind of a sideshow, sometimes for politics, sometimes for good social reasons, but is this a believable budget in terms of economics? So let's have a look at the forecast, the deficit going from $18.2 billion down to $14.5 billion. Totally believable because we've seen a massive fall in the deficit over the last year, and that's primarily because we've been creating lots of jobs, and I think more jobs will come, not as much as last year, but still there'll be jobs. Then we've got economic growth, 2.75% going to 3%. That could be a little courageous, but the Reserve Bank thinks it's 3%, so let's run with that. Unemployment going from 5.75% down to 5.5%. That's very much believable. Inflation 2% to 2.25%. Once again, I give that a tick. And wages 2.5% to 3%. I hope that happens. Wages have been the problem, and this is the reason why I like this, what you might call economically irresponsible budget. It's great for politics, but I also think it's good for the economy because you need to get economic growth happening, to get wages rising, and once that's happening, we'll have a normal economy again. We haven't had a normal economy since the GFC, and the world's gone through this craziness of nearly zero interest rates around the world, even negative interest rates in some economies. So I do believe this was a rare example where good politics is actually good economics. The year after, whoever wins the next election will have to put a horror budget in, but the economy will be doing so well and growing so well that they'll be able to tolerate the government really withdrawing from the scene. At the moment, the economy needs the government, so this is, I think, a good budget.
Thanks, Peter. Thanks for joining us on Switzer Investment Insights, brought to you by NabTrade.